And today we are talking about our 8 years of crypto experience.
There's no massive secrets to investing. It's accumulating, appreciating assets and compounding over time.
The reality is crypto is heavily influenced by the stock market and interest rates and global liquidity, a lot more than probably what you would think.
Getting out at the perfect time doesn't exist. Getting in at the perfect time doesn't exist.
When there's uncertainty, people get out of risky assets. And guess what? Crypto's bloody risky.
Mate, it's always hard to build a crypto portfolio.
It's never easy. Welcome back to another episode of the Ben and Bergs Podcast. I'm Ben, your favorite high school dropout and founder of Collective Shift. Alongside me is Bergs, your favorite MBA and COO of Collective Shift. We're here to bring you world-class crypto research, strategies, and insights to help you crush this crypto bull market, plus get an exclusive behind-the-scenes look as we scale Australia's leading crypto research company. And today, Bergs, we are talking about our 8 years of crypto experience. We've documented our top 12 lessons that we wish we had when we first started. And I spent a day yesterday sort of preparing these. I'm sure you've got some thoughts and lessons of your own. But, ideally what we've tried to do here is help pull together some lessons for time-poor individuals. So this is not for traders, full-time crypto degens. This is for people that are busy, they've got shit on, they've got a career, they've got a family, they've got a business. And it is sometimes hard to build a portfolio and manage it when you've got so much stuff going on, which is exactly why we built Collective Shift, to help busy people. And we wanted to give people today on the pod our top 12 lessons to help people think about things if they are busy and have a decent crypto portfolio. So can you crack into these?
Mate, it's always hard to build a crypto portfolio.
It's never easy.
Exactly. It's an emerging market. Things change quite rapidly. And we're now both in our eighth year in crypto. So we both started seriously in 2017, in and around the traps kind of 2016, just dipping the toe in. So this is our third cycle. And these are our best lessons that we kind of got together and we're like, okay, if we're going to tell our audience, like if we've got a brief period of time with them, what are the things that we would want them to know? So we're going to go through those and explain each one and give some experience shares as well. So Ben, kick off with the first one, mate.
And I think people will probably resonate with these as we go through. But the first one is that crypto cycles come and go. And what that means is that it's very easy to think too short term in crypto and think that whatever's happening right now is what's going to be happening forever. Right now we're in a bit of a correction. The market's down, altcoins are down. Everyone's sort of throwing in the towel. They're bored. They're frustrated. They think the bull market's over. The 4-year cycle isn't playing out as what everyone hoped. But that's okay. Markets are very adaptive based on what's going on, and crypto is very, influenced by macro cycles and the macro financial system. And I guess the point of this one is that don't get too caught up in the short term. Don't expect everything to happen perfectly like it has in previous cycles. Follow a longer term time frame and understand that this bull run still has a long way to go. But there's a few hurdles along the way, and you're going to end up making poor decisions if you get frustrated in the short term. We've been through a lot of corrections and cycles have come and gone with different news. We have FTX and Luna and all sorts of different stuff over the last, number of years. It's important not to get too caught up in the short term.
Yeah. And also think about who you're listening to, especially online. The majority of people are just accumulating for the long term. And you see these people that made tons of money in Ethereum in 2016, 2017, or tons of money in ICOs or NFTs, and all these traders posting their gains. That's great. First of all, the majority of that probably isn't even real. But you need to think about cycles coming and going, and there will always be another cycle. And getting out at the perfect time doesn't exist. Getting in at the perfect time doesn't exist. But you're in an emerging market that is growing very rapidly. And most predictions, we're around the $3 trillion market cap at the moment for all of crypto, is to 100 trillion within a couple of cycles, so within 8 years. That's the general consensus. And even if they're off by a factor of 2 or 3, it's still, even if it's only 30 trillion, that's still a 10x from here. So recognize that and then invest accordingly. And really, there's no massive secrets to investing. It's accumulating, appreciating assets and compounding over time. That is a surefire way to build your wealth.
Yeah. Great call, Bergs. Number 2 is macro liquidity cycles drive crypto. So I think for a lot of people that come into crypto, they don't realize that crypto is a very, very, very small part of a broader financial ecosystem. And, the reality is crypto is heavily influenced by the stock market and interest rates and global liquidity a lot more than probably what you would think. And, right now and for the last little while, we've been in this quantitative tightening period, which is essentially where the Fed are reducing the amount of money in the economy, and that isn't great for risk on assets because money is harder to come by, which means people have more of a less risk associated investment strategy. And especially over the last couple of months with Trump and the tariffs and the trade wars, people are frightened and they're worried and they're concerned. And when there's uncertainty, people get out of risky assets. And guess what? Crypto's bloody risky. So people get out of there. And that's why we're seeing a big correction at the moment. But one thing that we do know is that it can also play in our favor just as easy. So when we do see quantitative tightening slowing, which we've heard from the Fed over the last few days, that's going to start to happen. And also interest rates coming down potentially around 50 basis points by the end of the year. That is really positive for markets and crypto especially because it's becoming easier for people to find money and then invest in a risk on assets. So long story short, following the macro liquidity cycles is a really, really important thing to follow. And it's important to understand that and not get frustrated again when you have all this great fundamental news that's happening in crypto, but the prices aren't going up. It's because the macro conditions aren't favorable, which we've been talking about for a long time.
Exactly right. And when we talk about risk curves, let's identify all the things you can invest in from least to most risky. And there's a general consensus on this. Least risky is holding your money in cash, so currencies. Then you move up the stack, you go to things like bonds, which are secured by governments. Then you go to real estate, then equities, which is stocks, then futures markets, options markets, then further down the risk curve as well. So there's more risk, but also more reward. Things like venture investing. And then finally, there's a few along the way, but then eventually you'll go towards crypto, which is probably the most risky area on the planet to invest in that spectrum. And within that, there's least risky cryptos and like more risky ones. But it's important to recognize that. So when Trump comes in and says something like, big tariffs for these companies, what's going to happen? Okay, I don't know what's going to happen in my entire portfolio of all these different industries I'm in and companies that I've invested in. So I'm going to go to the most liquid thing I have. That's the most risky, which is crypto, in a 24/7 global market, and I can get at instantly. There's no calling my broker T+2, all this nonsense. Take that money out. So I've got more money on the sidelines, depending on how that uncertainty plays out. Again, if you come further in on the risk curve and you look at venture investing, like venture capital, they're going to start to look at it and be like, oh, Canada, Mexico, a few others are going to have massive tariffs. Those tariffs are going to affect these industries. I'm not going to invest in those industries because they're instantly 50% more expensive for the giant market I'm going into, which is America. And then you go down the stack and you start to look at the stock market and everything else. So when these giant macro things play out, that's how all of those different investable assets get affected.
Yeah, great explanation. Okay, number 3 is crypto corrections are very normal, and I think everyone sort of knows this already, but you can't see what we're looking on the screen, but there's a great chart that we use all the time to help us understand drawdowns in crypto in comparison to previous cycles. And in terms of the 2021 bull market, we had 12 plus 25%, 25 plus 12 corrections. Let me say it again. We had 12, 25% plus corrections. And we've only had 4 this cycle, right? So like in terms of previous cycles, like we haven't even seen half of the sell pressure that we have in the previous bull market. So, these corrections are really normal. You get huge waves of euphoria like we had, late last year around the meme coins and then even the start of this year. And you get, just like we saw with the ICO boom and DeFi and, NFTs, you get these cycles within cycles, everyone gets FOMO, everyone gets euphoric, there's huge traders, and that leverage needs to be wiped out. We need to reset the foundations. We need to get rid of all the nonsense and start again. And that's what happens in crypto continuously. So this correction is very normal. We're about 25 to 30% down on Bitcoin at the moment. Yes, a lot of altcoins are down. but that's very normal. And there's probably a lot of altcoins that won't come back too, right? Because there's been so many new coins created this cycle that it's not just the same as just holding on and hoping for the best this time. So, corrections are normal. Bitcoin coming down 30, 40%, just another day in paradise. And for the altcoins, yes, these corrections are normal, but also you do need to understand that a lot of these tokens that are down, a token that's down 80% needs to go up 400% to get back to break even. So you need to be really considerate and careful with the assets you have in your portfolio.
Yeah, be realistic with yourself. And this is why Ben and I say that bull markets are harder than bear markets, because it is not up only. And if you just look at what's happened, this is a 30% drawdown just in Bitcoin alone, let alone all the alts that are bleeding. Think about leading up to last year. We're like, Biden gets elected, this could happen, or what's her face? I forget her name. I think everyone's forgotten her name. That could have been elected. And you look at that and you're like, holy crap, the stars aligned. Trump was elected. He's pro crypto, America. Let's go. Elon, Doge, let's go. And everything just pumped and it was amazing. And now all of a sudden we've had the stars align and there's tariffs. There's all these negotiations. There's uncertainty. And this is one of those huge drawdown moments. We know directionally that just taking Bitcoin, it's never been stronger than it is today. Every week we hear a new piece of information, another company buys in, another piece of legislation has been passed, another country allows it. The fundamentals are aligning, but these corrections are very difficult to stomach. And honestly, this is why you're in this market, because you want the volatility. You need it both ways. You want that high volatility to then get the gains. But when things go down, you need to have the stomach for this to experience those highs once again. Do not get shaken out.
Yeah, and you do need to adjust your strategy as well. Like when we go into these corrections, having more risk on and off strategies is really important. Like I put out a post to our members about 3 months ago, how we're going more risk off. We sold out off a lot of our altcoins and lower positions because of the way the conditions were running. Like you do need to be on top of this, and we know you're time poor. Again, one of the benefits of being a member with Collective Shift is we share with you exactly what we're doing, and you can follow along. And that's been a huge benefit to a lot of our members because of the fact that you're so time poor, you don't know what's going on. We are literally in the market 24/7 with our research team, so we can help you along the way.
That's it. And let's skip up to lesson 7, because you just touched on this here. There are cycles within cycles. Everything doesn't play out perfectly. There are different narratives, and you will need to adjust along the way. Do you want to take us through the different types of cycles here, mate?
Yeah, so I put this in here because a big lesson for me this bull market so far is the cycles are running like so much quicker than previous cycles. Like we're having cycles within cycles. Like we had a big meme coin cycle, then we had an AI cycle, then we had the 2017 cycle, all within the last 12 months. So you really need to identify what is a longer term like sector that's going to be here for a long time and what's a shorter term hype cycle. And we see a lot of investors make the mistake of chasing the hype cycles, jumping onto the meme coins at the top, and now you're probably down 70 or 80%. Like the reality is a lot of these cycles, if you want to chase the hype, you need to be on top of them, right? You need to be in and out. Like when Trump launched his token, one of our platinum members, I think he made about $120,000 from the trade, but he was in and out the same day, right? And you need to be on that. Otherwise, you're going to be jumping in and then forgetting about it or missing the right time to get out. So the lesson here is understanding that this market is moving faster than ever. There's never been more tokens created. And to build a portfolio, if you're time poor, you really want to try and avoid those hype cycles and just continue to build on narratives that'll be here for a long time.
Yeah, the Trump coin's a classic example. So I saw that happen live on Twitter and I had the opportunity to go in, and I'm like, no, I don't want to waste my life because I don't know how long this is going to go on for. Is it a multi-day trade? Am I going to sit in front of the computer? Is it going to be 5 seconds in and out? I don't know. And I promised myself I am not a trader. And we saw some people snipe it. They knew what they were doing. They made money. A few people in our group made money. But then over the next 1, 2, 3 days, when it hits the mainstream media, people start asking, should I get in? Should I buy? And we're like, well, we're pretty sure the money's already been made. Here are the things you need to consider. Here are how other coins have played out. And sure enough, the money was made and that thing is just flatlined.
Yeah, it's bang on. And again, we've always seen cycles in crypto, but never at this pace that it's been moving at.
Exactly right.
Next lesson
and this
here
is the thing, like it's impossible to keep over this as an individual. You need to be in a group and have different people researching different things, and then also have that discussion and experience share when you are making decisions, because it adds so much flavor to what you're doing, and it really reveals blind spots for you as well.
Yeah, I think that's why I love the platinum like membership we have now. We have about 110, I think, platinums, and we do monthly forums where we can update everyone on what's going on. But also with the WhatsApp channel, we're putting in alerts whenever you need to know or need to action something, so you're never going to miss a beat. Plus, you have access to myself and the team, whether it be through WhatsApp or when we do quarterly check-ins, we give everyone a bell and sort of walk through what's going on and help them with anything that's happening. Like, that is so valuable for someone that's time poor, and that's why the group is so valuable, in my opinion. Okay, the next one is just remaining patient when the market is doing nothing. It's some of the most boring times, and we're kind of in that now, and we're just chopping around doing nothing. But you really just need to avoid making boredom trades, I call it. We had we had a member.
100%. It's the equivalent of like boredom eating at night when you're like sitting down in front of the telly and you're like, oh, I'll just eat something. It's like, no, don't.
No, it's always a good idea before you do it, and then a terrible one after you've done it. It's just like you don't need to change things. You don't need to try and like make something out of nothing. Like, as soon as you try and artificially create returns, or you start to like leverage yourself up, or you start switching between tokens because you think one's going to get a little bit high performance, it usually ends bad. And we saw this the other day. A guy, sold out of, I think it was sold out of Prime to get into Hype. Prime then pumped 70% in a week, and then Hype went down. So it's like, you just remain patient, have conviction in the assets you have, and try not to make too many moves when things are not doing too much.
Absolutely. And, our business mentors have told us, Ben, like, just leave the business. Just don't touch it. It's okay where it is. Like, do your little optimization, but you don't need to make these big sweeping changes all of the time. Yeah. And if you've got your strategy and what you assume to be true hasn't changed, there's not been a huge signal in the market, or Trump hasn't said something to change things, or the narrative isn't over, then stay with your strategy and look to like a time-based emergent strategy where you keep accumulating against what you believe to be true. And you'll find that the more distance you get from it and more time, the more conviction or signal you will actually get as well. Yeah. And that helps a lot. If you're making these changes because you're panicked, first of all, look at your emotional state. Are you panicking? Are you bored? Do you feel like you need to be more active to, get extra gains or earn it? They are big signals for you to step away, go for a walk, think about something else, come sleep on it, come back tomorrow and see if you would still make that same decision.
Yeah. Yeah, I love it. Next one is just...
And again, hang on, before we move on, investing, like, if you're excited about it and you want to get into a trade, again, red flag. Investing should be boring, right? You should do the research, boring. You should invest and set up automation, boring. All of these things. If you want that like super hype trading thing, do that with a very small percentage, like less than 5% of your capital, and do it with that. The other things, if you're excited about a trade, again, step away and think about it.
Yeah, I agree. Look at key project metrics as the next lesson. So again, this is kind of a simple one, but I think going back to the idea of chasing hype and chasing FOMO, like, you really want to understand the token a little bit more. I think where a lot of people have been called out in the last few months is really around not understanding things like token unlocks and inflation rates. Even on something like Solana's inflation rate, they are unlocking more and more tokens. They had bigger unlocks, in the last month or so. You can look at things like staking your token to offset that. So I think you can get up to 9% on Solana. I wasn't always a big, I wasn't always a big guy for staking my assets, but when you've got inflation coming in from, increased supply of these tokens, you can use staking to offset that. And you look at market cap versus, fully diluted market cap, and then also look at the price of a token. A great one I always use is Illuvium. If you look at Illuvium and you look at the market cap, the market cap of the asset from all-time high, last year got to within about 25% of the all-time high market cap, but the token price was still down near 80%. That is because the amount of new tokens that were put into circulation. So if you're holding a coin that's down and you're waiting for it to go back to all-time highs, you do need to understand that for 90% of these tokens, they have massively increased their supply, which means that the market cap and the amount of money that needs to be invested in these tokens needs to go up considerable multiples higher for it to get back to its previous all-time high.
Yeah, because you look at the marketing of these companies and you're like, great, they're putting their best foot forward. Jump on the blockchain. How many people are transacting on this thing? How much money is being pushed through this thing per day? What are the big unlocks coming up for the developers, for the staff, for the early investors that want a liquidity event and they're going to dump their tokens? When is that happening? How many? How do you get diluted? What is the daily production with inflation? How are they getting fees? And what apps are being built on it? How many more smart contracts? All of this is very discoverable. Things like June Analytics is a great website to find all of this out, and even just exploring the blockchain yourself. And doing that 10 minutes of due diligence can really give you a good understanding of what you're buying into, rather than believing the marketing from people that have heavy bags or the company themselves. Because the company themselves is always going to say that they're great because they want people to use their stuff.
Yeah, totally agree. You'll look between the signal and the noise there.
You need multiple sources, mate. Like, you can go to them to get some information, but then the due diligence is on you to go through and make sure that it's actually true.
Yeah, totally agree. Right, next one is managing your fear and greed, and this is one that humans just inherently struggle with. This is the idea of not being cautious when everyone's getting euphoric and not taking profits when you're sharing screenshots with your mates and telling everyone how much money you made, and also not taking the opportunity when everyone is fearful and everyone's panicked. It's easier said than done, and upon reflection, it's the easiest trade ever. But in the moment, it's very, very difficult. So just trying to avoid FOMO buying as much as possible. Try and avoid, not taking profits when things are getting really frothy. Like, it's just a really good signal and red flag if you are bragging or sharing screenshots or telling people how much money you make, or you're just feeling genuinely amazing about your portfolio. It's usually a good time to start taking profits.
I'm the best investor ever. Only.
I'm a genius.
Amazing. Huge signal. And Checkmate puts it really well. The best buying opportunities he's had, the best buys he's done in terms of gains over time, have been the ones where he's felt absolutely sick buying. So these are ones like a couple of weeks ago where, Bitcoin's in the 70s and everything's just down only, maximum pain. Everyone hates it. And you're like, oh, disgusting. I've got to put 10K in. I don't know. I might lose that money. It might go down to 50K. It might go down to 30. They're the kind of opportunities. And if you think back in time, like when Bitcoin went down to in 2017, like leading up, it went down to 3K, or after that cycle, or when Bitcoin was around November 22, dropped down to 20K, you're like, oh, gross, disgusting. That is when you need to buy. When you got that feeling, that's another signal. Step away. Why am I feeling this pressure and like I'm an idiot? Because anyone can buy when it's going up. But making those purchases is when you make your most money.
Yeah. They've always been the best buys for me too. And then when I've sold in the past, it feels physically sick.
Always, mate. I've left gains on the table. It's like, yeah, you probably have, but who cares? You're locking these in and you're changing your life. Otherwise, you're going to be a community member.
Next one is have a proper sell strategy. And we talk about this a lot. Again, if you need help on this is a big one that we work on with all of our platinum members one-on-one, and we help you sort of build this out, because not having a sell strategy is not going to allow you to take profits at the right time. Round tripping and fucking up this cycle is very, very painful. And I think everyone's done it at least once or twice. You really want to make sure you have a good strategy in order to taking incremental profits. And I'm excited, Bergs, like this year at one of our in-person annual days of Platinums, we're doing a full-blown in-person workshop on this, which is going to be super exciting, workshop style. We're going to have all of our analysts, everyone sort of delivering this to help people really dial in a proper sell strategy, because it's honestly the thing that's going to make, the difference for people to actually make sure they get out and take some profits at the right time.
I think between us, we probably know about 50 plus people that we see quite regularly around the traps, crypto people that have made between 1 to 10 million in crypto. Out of those 50 people, I know one that took profits. That person made, I think they were in 8 figures. So let's just put a number on it. Let's say they made 15 million and they took 500K profit and round trip the rest. They were the only one that actually took out a meaningful amount. The rest, some I know were up to 2 or 3 million, back down to about 50K. It is crazy. It is absolutely crazy. And these are people that live and breathe in this space. They're all human. They're not immune to it. And having a proper sell strategy will avoid that happening. Like if you're up like 10 mil, you should be taking a significant amount of chips off the table and using that to secure your life or build the life that you want. As I always say, money is just spending tokens. Like having these huge accruals, like what are you doing? Why? It's like having huge annual leave from work. Take your annual leave, go somewhere with your family. Like don't just stack it all up. The idea is to spend that and use it to change your actual life.
Yeah, totally agree. Do something with the money. And it's just like numbers on a screen until you put it in your bank account. And then when it's in your bank account, you're like, oh fuck, this is real. It's a weird psychology.
Exactly. It's real. You pay tax on it. And now you can have different and better life experiences because you have more resources behind you. You can truly change your life.
Yeah. So good.
And again, that is confronting for people. First of all, selling, very hard and very confronting because you're worried, will I get it wrong? Will this happen? Will that happen? But then once you have the money, actually deciding what you want to do with your life and then spending that money. These are very difficult things, but if you want to grow as a person and experience a better life, this is what you need to do.
Amazing. The next two I'm going to combine. So this is buy long-term assets and dollar cost average and accumulate over time. So this is like a boring one. Again, back to our point before around, being boring is better. I did this for 2 years from 2018 to 2020. I used a software called or a platform called Get Paid in Bitcoin. I put my entire salary into Bitcoin every week for 2 years. And the amount I was able to accumulate during that time was massive, right? I was pretty much buying as much as I could. It was boring, and I'm an all or nothing kind of guy, and it was very difficult to do it. But setting up the processes and systems like we spoke about in our personal finance podcast the other day, accumulating Bitcoin has been the best decision, or would be the best decision anyone's ever done, right? If you look over the last 2 years, Bitcoin has outperformed everything outside of Solana. At the start of January 2023, if you look at any portfolio allocation of like the majors and you compare it against just holding Bitcoin would have outperformed everyone, unless you're getting in and out of like crazy memes, of course. But, dollar cost averaging and building up a big stack of BTC through your income, through dividends, through profits, through whatever means you can, and being in the market, Bitcoin is compounding at 40% year over year. And even in this correction, Bitcoin's still up 40% over the last 12 months. So don't underestimate the power of just accumulating Bitcoin over time.
And people are actually doing this already without even knowing, not in Bitcoin, but generally in equities. If you log into your superannuation account, you'll be like, holy shit. So if you're in like your 40s or something like that or higher, watching this thing compound and track over time, you'll be like, holy crap. All that is 10% of your income going into a fund, which is automated. You don't even see it. Your employer does it for you. And it's compounding at a rate of 8 to 10% per year. Now, imagine if you did 10% of your pay and it's compounding at 40% CAGR. That is mental.
That's nuts.
Literally type that into any compound growth calculator or do it yourself in Excel or Google Sheets, and it is incredible. Two things about this: is automated, you don't see it, it's boring, and one day you wake up rich.
So good.
But no, people feel they have to be active and trade within an inch of their lives.
Yeah.
And it's like, that ain't the thing.
No. Second last lesson here, filter who you listen to. Again, another obvious one, but there's just so many people that come and go, and usually the influencers and the shillers come back when the market's hot and they pump their altcoins, they get paid to promote stuff, and it's just pure nonsense. Especially if you're time poor. Guys, you do not need to be following and listening to every bit of content, trying to stay up to date with everything. It's just not helpful. And people create content because that's the way they get paid, which is usually advertising or affiliates or fees, that they make it super intensive, super emotional. Like it's all going to zero, it's all going to $1 million, and it's always changing. And it's just entertainment at the end of the day. So prioritize people where you can get both sides of the equation. We try and do that the best as we can at Collective Shift, giving you both sides of the story. We're independent, we're investing ourselves. Just be careful who you follow, because I've seen people follow down a dark path and getting really poor information. It can really throw your investing off.
Definitely. And ask yourself, if you're listening to something, what are these people's incentives? Why are they doing it? How do they get paid? What is their business model? Majority of the time with influencers, you are their exit liquidity. They've bought a huge bag, they're talking about it, pumping it up, and then they'll sell that bag. Or they get paid through different affiliates and getting you to act and trade, hacking your emotions and getting you to take an action. This is why we chose our specific business model. You pay us a subscription fee. We provide a service every single day. And the day that that service doesn't match up, you pull your fees and you're gone. That is the business model we have because it aligns with how we need to provide value all the time to our customers. We don't dump on our customers. We don't have coins that we have. We have a trust and transparency page so you know what we're holding. And just look at that incentive alignment and try and balance that out with some different views as well.
Yeah, bang on, Bergs. Last lesson here is portfolio allocation is key. And this is when I see a lot of people make the mistake of is they over allocate into a certain altcoin. That altcoin doesn't perform. And then all of a sudden your whole portfolio is dragged behind. So, you might have 20%, 40%, 50% in your favorite altcoin, and now it's down 70%. Doesn't matter what goes on in the rest of your portfolio. Your portfolio is going to be down a lot. So ensure you're balancing your risk. Ensure you have a good chunk of Bitcoin. Make sure that's your foundation and then diversify the rest. If you've followed what we've said and had a large amount of Bitcoin, you're doing all right now. But if you've had all altcoins or a bunch of altcoins in your portfolio, you are down considerably. So just make sure you're building your portfolio allocation the right way.
Exactly right. And then also when your portfolio balloons, you may have an altcoin that was only 1% of your portfolio that's now 20% of your portfolio. When you see that, you're going to, first of all, congratulations. And you're going to be like, yeah, that's amazing. It's going to go to the moon. But consider it. Hey, should I be reallocating this to other areas and rebalancing my portfolio with what I know to be true now? Because you've got significant gains there. And just keeping an eye on it and what's happening in the market is definitely key.
Yeah. Agree. Well, that's our top lessons, folks. There's obviously a lot of other lessons we've learned along the way, but they're sort of the key ones we felt for time poor investors you should remind yourself of, think about, and this is the time when the market's in a correction that you can think about, reflect, think about the mistakes you've made, think about your lessons. And again, if you are time poor, we have a couple of great services, whether it be our pro membership to help you with the research and content and asset ratings and community, monthly sessions. I did a monthly session the other night to help people out. Or if you have more than $250,000 in your portfolio, and you're wanting some more one-on-one, you're wanting some coaching, you want to meet other, higher net wealths, you want to come and do in-person events, private WhatsApp, get access to me, Bergs, the team. We've got an amazing group there. It is an application. We don't accept everyone. So you can head over to our website and check out the Platinum program there. We've got our next big roadshow coming up as well. So we are going around the country and catching up with everyone. So we've got events in Sydney, Melbourne, Brisbane, Adelaide, and Perth coming up over the next few weeks, which we're excited about. We'll be posting that on social media very, very soon. But yeah, thank you so much again, everyone, for tuning in. We hope you enjoyed the episode. If you found it valuable, we'd love for you to share it with a friend. It's how we grow the podcast, and we'll see you very soon.
Thanks for listening, champions.